Hey, you welcome to today's episode of DAOM Mentorship Session. Let's go. Let me share the links. Sharply. Let's do it. Okay. Okay, as you are coming in, guys, you're welcome. That's the one. Tell us where you're joining us from today.
Are you a STEM professional and are looking to apply for U.S. permanent residency? Then stay tuned because today I'm going to be discussing an exciting option for certain professionals in the STEM field. I'm attorney Carlos Colombo, and today we're going to discuss an opportunity for professionals that are in science, technology, engineering, or mathematics and are looking for U.S. permanent residency.
Okay. How about guys? The background sound, is it reasonable? Is it not too loud? Is it going silencer as supposed to go? Let me hear from you. Good morning, good morning, good morning, Kanye. Good morning, Torado. Good morning, Juliet. Good morning, Andy Wallace. Oh, it's all right. God will continue to bless each and every one of us. Young Joe from Ghana, good morning. Good morning, Kanye. Good morning, Young Joe. Good morning, every beautiful people here. How is it going, guys? How is it going? How is it going? How is it going, guys? How is the background sound? Is it going smoothly? Is it not too loud? Is it not, or should I reduce it or should I stop it? What do you guys think? What do you guys think? Yeah, we're good. We're good. I'm super good. I'm super good. Super good. Are you good? Guys, let me hear from you. Let me hear from you. Let me hear from you. Make sure you smash the like button as you're coming in. Slim Fit from Abuja, you're welcome. Kanye, where are you joining us from today? Juliet from Abuja. Torado, where are you joining us from? Something. What's up? What's up, my beautiful people? What's up? What's up, beautiful people? How was the night? Congratulations to all of us that made profit yesterday. So, guys, the background music, I need to hear feedback from you. Is it okay? Is it not too loud? Is it reasonable? Should I leave it or should I stop it? Or what do you guys think about the background music? I just want everything to just go smoothly and interesting. What do you think? What do you think? I need your honest review right now. What do you think about that background music? It's perfect. Okay. I got response from Kanye say it's perfect. Miss George say
Hello, Con speaking.
I know this is last minute, but I was just wondering if you could make another video for us.
Sure.
But with the same deadline.
I can get my team on that ASAP.
It's got to look.
okay. So guys, not too loud, it's a vibe. Okay, it's fine, it's fine, it's fine. I'll step it, I'll start it again. Guys, what do you think about yesterday lessons? What do you think about yesterday lesson? What do you think? What do you think about yesterday lessons? Yeah. Okay. So what do you think, guys, about yesterday? Was it like, I know a lot of you, I got some feedbacks. I know the feedbacks I got yesterday. And want to make me to do more. Want to make me to do more. That's one thing about feedbacks. Like when you appreciate, when you talk about, oh, this is what I did from what you did. So it's going to actually motivate ones to want to do more. So even though what I'm teaching you guys today, I've taught it before. But I want to just emphasize more on it today. Hold on for me, guys. I'm sorry.
Are you a STEM professional and are looking to apply for U.S. permanent residency? Then stay tuned.
Okay. So let me read to you guys. Kanye said, "Mind blowing wisdom. God bless you. With respect to it was yesterday. I knew it was you. Never knew it was you. Okay." Mr. George said, "I learned a lot about psychology and trend. Beautiful. And yes, when you took it a step by step, explaining every detail that I learned. That's beautiful." So today we are going to talk about major levels and minor levels. So before we dive into that, let me quickly share my screen. Let's look at the trade we are on right now. We are on a trade and we have been on a swing trade too. So let's just look at all those trades and let's see what, if there's anything we need to do, if there's any advantage, if there's any action we need to take, considering what the market is actually offering us at the moment. Okay. Yeah, beautiful. So let's go. Welcome to my screen. So like right now, this is AUD USD. Guys, remember I taught us about Fibonacci yesterday, how to use Fibonacci retracement. I said from weeks to weeks, look at it. This is the Fibonacci we drew yesterday. Let me delete it. This is the Fibonacci that was drawn on weekly time frame. Remember, this is the 0.61, this is the 0.50. So, but because this is an immediate trend and we are on a did I draw it from 15 minutes? No, I think I drew it from 1. Yes, I think I drew it from 1 hour. So now, when this trade was reversing up like this yesterday, it got here. Let me put an horizontal line here. It got here yesterday. So I said, okay, guys, get out of this trade. It's retracing. And now, what did I now do? Because I know it's retracing, I draw it from this recent high the recent low. This is the recent low that this market got to. So I put it like this. I said this market will get to 0.5 or 0.61. Any of it will enter. But look at what it did. It get close to that 0.5. It didn't touch as expected. But you know, because it's a strong sell trend, just get there, weak down, try to come up a bit, then ever since then it has been coming. If you say it go here, probably I will have catch this trade and tell us to up in again. But yeah, it has started selling, but guess what? Me, I had my entry around here, so all this profit right now, though I exited the one I took here yesterday, I also exited the one I took here yesterday. So hoping that when this thing comes up again, I'm going to re-enter and then continue to the downside. But all I just know is that the one I took from up here is deep in profits. That's how Fibonacci works. Just imagine it came close to that side and then boom to the downside. And remember, I said this thing again yesterday that when it gets to the 100% retracement, it usually retrace before it further down. This is the next Fibonacci extension level, this green here. So it's supposed to, let me draw it like this. So it says it retraces like this. You should touch this 0.5. Come here, this is 100% retracement, and then most of the time you usually retrace. That's why there's always a TP in that 100% retracement. Usually sometimes it will just form W for you and start going up, but sometimes when you see on a strong sell, you just do something like this and then to this level. So right now you will see that now we don't know if it's forming W or you just want to do a small retracement then come to the downside. It's going to do either of it, but either of it we are going to be looking and we are going to know the decision we are going to make. Okay, so that is how, that is just a corroboration about what we learned yesterday on Fibonacci retracement. Do you guys copy? Do you copy? Do you copy? Let me know. Put it in the chat if you just get the explanation I did on the USD. While I move to GBP, Euro USD, GBP JPY, and the nice trade that we are on. Let me. Let's be fast. The copy good. Miss George, you're welcome. Where are you joining us from today? Your name seems near. Your name seems near. Where are you joining us from today? Okay. So it's looking like it's only Miss George that got the explanation. Miss George, were you here yesterday or you watch it later? Were you here yesterday or you watch it later? Kanye, do you get the explanation? Andy Wallace, do you get it? Juice, Young Joe, do you get the explanation? Only Miss Plot is here. Okay, you watch it later. Okay, so beautiful. Let's continue. Let me look at other pairs that we are on. Now let's look at GBP USD, ladies and gentlemen. GBP USD did a strong thing today, and that is because of the news. But it might be like that, but I'm seeing another very great opportunity, a long time great opportunity with the news today. I can start I can just start studying what's how CPI move right now. Just like the way I was busy studying how NFP move, and I can just start studying how CPI move. So studying it will give me an edge in the market again. It can always position us for CPI, but I've not said I know it yet. You can see this trade was here. I think it was here when I said we should get out, because I knew that with the way that movement is likely for, and guess what, this is where we are expecting this trade to get to since yesterday. Before we enter it here yesterday, we entered it here yesterday, because I could see that if you go to 15 minutes time frame, you will see a W pattern, even though the W is bending. But you can clearly see that this is it 1, 2, 3, and then to the upside. So it break, it retest, and then I ask us to enter, and he gave us this profit before boom. I think it was the news that did it, because if not, look at Euro USD. Euro USD is still in profit. Since yesterday we entered from here, you can see he also went up, do all this blah 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 blah, but it's still in profit. Okay, let me delete this. Okay, so you can see the Euro USD is still in profit, though it's retracing also, but you won't use this retracement to compare that of GBP USD. Can you see? So right now GBP USD has gotten to a psychology level. Look at it, guys. It has gotten to a psychology level where we'll look at what is it going to do. Another 15 minutes candle just started. If there is any kind of reaction here, a consolidation slash forming something like a W, is going to be a clear indication for us that we should buy. But if nothing happens, it might just keep coming down. But for now, that's why I said get out, get out. So that's that on Euro USD, and that's that on GBP USD. But I'm sure you are still in profit in Euro USD. Euro USD, our entry was, I saw a W, you can see that W pattern here, and this form around a major level, in psychology level, according to the way I thought it yesterday. Look at it. 0.0900. Let me draw so that you can see. So this is just a recap of what we thought yesterday. You can see. So look at it, 1.09000. That's a psychological level. Look at the way the market respects it. Even though I was expecting the market to come to this level, 1.080, that was why our stop loss was way below. If not, I would have put our stop loss here. We'll have a bigger loss side, but I'm just being skeptical because I know that there's a trend line here that this market might not want to come and test this trend line and then continue to the upside. And right now, there's nothing that says it might still not come. You can see the trend line is still here. So if this market now do something like this now, you can see the trend line has moved up to the level of where we have that psychological level. If this market get here right now, I expect it to move to the upside. So I might just add position. You guys understand? So that's how it was. You can see it got to that psychology level. You can see it couldn't even close below. You just do this, come back, do this. I see W pattern break, came back to retest the neckline. This is the neckline. Can you see? This is the neckline. Can you see the neckline? This is the neckline of this W. After it break out of the W, it consolidated, came back to retest the trend line. You can see. And that's where I said let's enter. So that's where we entered, and then you can see. So ladies and gentlemen, let's be patient. When there is knowledge, by the grace of the Most High God, we are going to grow. We're going to make a lot of money. All we just need to do is to make sure we have the right knowledge. So there's trend line here, there's psychological level here. The market might just come, test it, and then move to the upside. That's that on. Now let's go to NAS. NAS 100. You guys see what NAS is doing. NAS is a bad boy. We enter this trade somewhere around here. No, somewhere around here or thereabouts. I think we entered this trade somewhere around here. It was giving us a tough time. Finally, it hit us out. And after hitting us out, it started going back. When I was thinking it's coming to retest this major level and this trend line here, it didn't do that. And it started going back up. Now it's consolidating. So at this point right now, I'm still, though my entry is still intact. I'm still in profit, but the one that entered here that also asked us to enter, it took some of us out a lot. So, but overall, I'm still in profit. So now let's just see what he wants to do. After seeing what he wants to do, we can know if we can add more position on NAS or not. For now, let's leave NAS to do what to do. DBP JPY, ladies and gentlemen, is retracing. I said it yesterday that this market, this pair, you can see it got here yesterday, it started running back up. I was looking at it. This is where it's likely for DBP to retrace to, according to Fibonacci retracement. Let me go to 1 hour time frame. Can you see? This is the recent low and this is the recent high. So this market is trending to the upside. So I draw it, my Fibonacci from here to this level. Let me extend it a little bit from week to week, remember. So now it has moved all the way to this upside. I just need retracing. It formed something like a double top and then it's coming down. I knew it's coming to retrace. So what did I do? I quickly draw my Fibonacci retracement, hoping for you to get to this level or this level, give me a confirmation, then continue to the upside. That's it. On BTC USD, honestly, I don't know. I'm not vibing this pair yet. I've not even taken my time to actually like what are we waiting for on BTC USD.
I'll be different on this one. Her father picked some boy over his own daughter.
See the way it has been running to the upside. One thing about this
National shows on Showmax, Africa's original streaming service. Sign up at showmax.com.
get out. So as I was saying, guys, look at the way GBP was moving. But you guys know that I've analyzed this pair that it is going up. Look at it. Since when I've analyzed that, it's going to come and test this place. And if it tests here, it will continue to move up. But look at it when I've drawn it. Look at how many days. This is a 4-hour candle. This is, let me say, I draw it on Tuesday, May 2nd. Since May, this is June, ending of June. Look at it. Before it now come to test it, they test it here first, they test it here second, and see now. I know it's coming here, it will get here. So just imagine if we have been waiting for a long time. That's one thing I was talking about when you do your analysis. Sometimes you do analysis, you wait for weeks, sometimes months, for what you want to play out. After they play out, then you can now enter. So imagine if the first time it got here, you have entered. Probably you move your stop loss to the below the major, below the minor level. You can see it came here to hunt. But if you give your trade a little bit that from what I'm giving this in, if you come here, this trade is invalid. Give it something like this, eventually it will be in good profit right now. So but we move. So ladies and gentlemen, this is AUD USD. This AUD USD. So guys, all these pairs that I have here, I have about 7 pairs, and I'm not intending to add any pairs to these pairs. I have gold, I have DBP USD, Euro USD, BTC, making 4, 5, 6, 7. I only have 7 pairs here, and I don't intend to add any pairs to these pairs. So, but because we want to teach a major level and minor level today, suggest a pair that we should start from scratch. Like, let's just start from scratch. Aaron, good morning. Where are you joining us from today? Suggest a pair. Just one pair that I don't have on my list. Can you suggest a pair? Miss George, you can suggest a pair. When anybody can suggest a pair. Just suggest a pair that we can look into. Let's do it. Let's do the analysis from scratch. GBP JPY, I have it on my list. In fact, I'm in profit in GBP JPY. I've analyzed it. If you want to look at how I analyze my GBP JPY with the major levels and minor levels, watch our previous live session on the query. Okay, can you have analyzed gold? Go to my previous live session, you see where I analyze gold. but I don't think I've analyzed USD JPY. So if I infidelity say USD JPY, so let's go for USD JPY. Let's go for USD JPY. USD JPY. Okay. Let me go for. Okay, I think I've. Let me see. Okay. Okay, that means I've looked into this page before I remove it from my watch list. See my old drawing. I don't know since how many months I've done this kind of thing. But anyway, I am going to okay. I'll just delete everything. This is USD JPY, ladies and gentlemen. Let me just delete all the drawings I have. Total I have 9 drawings. Remove all the drawings. So it is pure chart, pure, like pure. So first thing you need to do, like my students are here, what's the first thing we need to do? Let me know if you guys are still with me. Okay, Juliet say hero odd. Somebody have said USD JPY, we are doing USD JPY. Just learn. You can always practice what we learn here on your preferred peer too. So what is the first thing we need to do when we want to start an analysis from top-down analysis? What's the first thing we need to do? God bless you, Aaron. I feel you. Identify the trend. The first thing we need to do is what? Identify the trend. So now, ladies and gentlemen, let's look at this here critically. Is it a uptrend or a downtrend? Look at it. I need answers in the chat box. Looking at it, this is an information chart that they gave us since when? This is since 2000 or 2002. Never box on here. Since 2002 till 2023 that this market has been moving like this. What is the overall trend of this market right now? I need some answers in the chat box. I need some answers in the chat box. I need some answers in the chat box. What is the overall trend? Beautiful. I need more answers to know if these people are right or wrong. Okay. Do you have only 2 people here? Okay, I'm not the uptrend. Okay. Now, ladies and gentlemen, you all are right. It is an uptrend. That shows you are always, yes, uptrend. Look at it. This market started from here. It trended down. After trending down, it started trending up. After that, it retraced. Just let's summarize it. This is a no man's land. So we have something like this. Low, high, lower low, lower high. The reason why it's lower high is because it's not up to this low. This is a lower low here, but we can't call it lower low because there's no any low before it. This is high, low. This is a lower high because it's a little bit above this recent high, but I think it's the same thing with this. So, but at the same time, because of this, we call it high. can call it high, double top. First, for us to be sure, let me do this. Can you see? Can you see? It's the same height. So I don't know this background music. Sorry, let me just take it again. Thank you. Don't like the sound. Okay. So as I was saying, let me delete. This is a market on a neutral level. They form a low. They form a low. They form equal high. From there, they form another what? Low. But this time around, this low cannot be called low. Instead, it will be called higher low because it's higher than this previous low. So we are going to call it higher low. So when higher low is formed, what do we get again? Higher high. And characteristics of uptrend is series of higher low and higher high. Higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. That's the characteristics of uptrend. But in a downtrend, it started from here, you get a lower low, lower high, lower low, lower high. That's how it works. So right now, this market is an uptrend. Okay, I've given those characteristics of an uptrend. So let me delete this. So after identifying our trend, now that we know that this market overall trend is uptrend, what is the next thing, my students? What is the next thing to do? What is the next thing? Let me just not teach this thing like I'm just teaching. Let me see if let me carry you guys along, so that people that will watch it after now will know that we've been teaching this. This is not the first time we're teaching this. Say trend line. How do you say trend line? Is it trend line that is the next thing? I need another answer. What's the next thing we should do after identifying our trend? What is the next thing we are supposed to do? Arnold Okere said major support and resistance. Identify our major level. That's the best way to put it. Mr. Andy put it very right. So we are going to plot our major levels and our minor levels. That's the next thing. Very, very simple. You will see that if not because I'm asking you guys questions, I'm just doing this thing on my own. Sharp, we are done like 5 minutes, 10 minutes, max 30 minutes. You are looking at it critically, 30 minutes, you are done. The only thing that will be left is for you to now wait for what you want to happen to happen. Take action. Now the next thing right now is to do what? Draw our major level. And where do we start our major level from? From the obvious points in the market. Our major level shouldn't be drawn with a line. Let me quickly teach that today. If we say we should draw our major levels with a line, look at it. This is a very, very obvious major level. You can see I put it here. I put this here, but it will couple. If you look at this pair very well, if you look at this candle very well, can you see it wicks up? There's a wick above here. Okay. This place now, it did as if you want to touch, but it didn't touch. So imagine if you have drawn this and you are expecting market to come back to this level so that you can take your trade action. Maybe you want to sell from there also. And the market got here and you are waiting for this market to at least touch here. And it didn't touch. All you just see is that boom, boom, and it never come again for how many months before it now comes. So you have missed that opportunity, not just because you use a line. So look at it here too. So if you are drawing a major level shouldn't be just one number. The major level is a zone. So anything in that zone must not be too wide, but reasonable. That is going to cover a lot of information in the market. Let me show you how it is done. So you use your horizontal rectangle. You use your rectangle to draw a major. I want to see all the charts. Okay, this is everything that we are looking at in our present. Now, major level. You see the difference between that major level right now and just a line. It's definitely some different. Okay. So, ladies and gentlemen, you want to use this to compare the line. You will not use this to compare the line because look at it. It touched here. After here, this one pierced in. It was able to pierce in. You can see it pierced in, and since it pierced in, boom, to the downside. Look at it. It finally break it here. It came here to test. If you have drawn a line, we'll have drawn a line here. It will not touch this one. We'll still draw another line. No, it will just make our analysis look messy. So right now I can extend it to the future. This is going to be our first major level. Why is it going to be a major level? Now let me explain so that we can get it right. You can see that major levels are not just any level that market gets to anyhow. Anytime market gets there, something important must happen. Market started from here, from according to TradingView, the information they provide for since 2002. If I'm right, 2002. Yes, since 2002. So since then, market tried to come close here. It came close. The hit, boom, to the downside. Finally, when it was 2015 before it now comes there again to that zone. It came there around 20. In fact, if we want to do it, if not because our major level will have just been too wide, I will have just extended it a little bit to accommodate this, so that you can see it's just that's going to make us to wait very well. Because what if market in the future just tested that place, it didn't get to this place like all this, and just tested it like something like this and started dropping down. So I will accommodate it like this, and then I will look at how I can actually shrink it, because it's not good when you go to smaller time frame right now. You will discover that this small line that we are doing now is wide. So now let's just see, it came here, come down, came here, touch, come down. Look at how many pips it has given us since it just touched. Since it touched here, look at how many pips. That's how you know a major level. Let me quickly calculate. Since it touched this level till this level, this is over 4,000, almost 5,000 pips. So it's very, very crazy. Where did it touch? Where is the last place that this market gets to? And since then, it has everly been selling to give us 5,000 pips. Very, very crazy. So it was here. It touches here. Boom. 5,000 pips. And the next time it comes, it touches here. It still gives us how many pips? When it touch here again, how many pips is this? It's about 2,700 pips. Almost 3,000 pips again. So that is where you know that this is a strong level. And look at it, when it eventually break, what happened? It came back to retest. That's to let you know that that place is a strong level. It came back to retest, and after the retest has happened, look at it, to the upside. To the upside. Can you see, guys? So now, after drawing this first major level, the next thing is that we want to draw another major level too. But right now, we are going to, instead of me to draw another major level, I can just drag this by pressing Ctrl down. I'm using my mouse to drag it. It's going to double it. And this is another major level. This one, I'm going to shrink it. I'm going to shrink it, you can see. So this one, it accommodates here. When this market first break out, it come here, it was here that pushed it back up. It came here again, boom, it gets here, it respected it, push up, finally break it. After breaking, it did what? It retested. After that retested, boom, that's how he give us that almost 5,000 pips. And when he gave us a clear W pattern here, can you see a W pattern here? When he give us a clear W pattern here, that's an indication that market wants to reverse. And look at what happened. Boom, he got to this level. When he got to this level, he pushed it down. He finally break it, retest, boom, to the upside. So when he gets here, he push it back down. And what stopped it when it was coming back down? It was this major level again. This major level said, no. There's security here. He pushed it back up, and then the momentum was still saying, no, you have to go down. And when he go down, he only touch here again. Once he touch here again, he still push it back up. And after pushing it back up, was able to finally break this level. He has been attempting to break this level for a long time. For how many years now? He attempted here, he attempted here. He couldn't break it. Finally, he was able to break it. After breaking, he retested. After retesting, boom, continue to the upside. So that's another major level trend. So now, let's see if we have another major level. Right now, ladies and gentlemen, I don't like when you draw too much. Like this analysis now is very good for swinging, because just imagine I'm not drawing too much, even though I might say draw more. Just imagine you catch a trade from here, the next level target is going to be here. So look at how many months each of these candles that you are seeing here took one month. Let me quickly measure from here. Here, that's how many bars? 15 bars. That's 15 months. Solar is now, the sun is not shining. My solar is complaining. Let me just off that light. So as I was saying, I just don't mind that here is a little bit dark. I can't remember the last time they're giving us electricity in Lagos. And then guess what? You still have to survive. For people that voted the government, congratulations to you. So as I was saying, guys, look at it. Since this market has gotten here to this level, getting to this level is about 12 to 15 bar. 12 to 15 bar is how many months? One month. We have only 12 months in 1 year, and we got about 12 to 15 bar here. That means this move from here to 12 months. 1 good year. That is swing trading. That is what? Swing trading. That is swing trading. So the analysis I'm doing right here is very good for swing trading, because once you enter, you have entered, because we are doing our analysis for you from the monthly time frame. So we are going to scale down. We are not going to be making our entry decision from higher time frame. We're going to be making our entry decision from 4 hour, 1 hour, there we go. So look at it. 1 year. And before you now break out of this level, it took how many months? This is from here, this is 2016. Finally, it break out in 2022. Can you see? Finally break. So you will see that people that know that this market is going to be is uptrend for a long time. Some people will have heard the trade from here. When they see maybe this neckline has broke, they will just enter this trade from here. Let's look at our Fibonacci. Let's introduce Fibonacci right here. Let's say this trade got here and it started retracing, and somebody that has entered from here will just say, okay, where is this trade coming from week to week? Ladies and gentlemen, this is what I taught you yesterday. Just yesterday I taught you. Look at it. The market traced back to 0.5. It didn't even get to 0.6. You get to 0.5. This is a multiple confluence. Number one confluence is a major level. Number two confluence happens to be 0.5 of Fibonacci retracement. And when the market gets there, what happens? The person, if we see somebody that is very crazy, that hold a trade from here all the way here, he saw a retracement for 1 year, he might catch this retracement without closing this one. He might catch this retracement, and then look at, if this market gets here, I'm going to add another position, and I had another position, held it for a long time. For how many years? That is an investor mindset. You will see them they won't make noise. You see them when everybody is rushing to the wall, that's when they want to go and swim. That's when they want to go and play golf. Because what? There is something that they have done that with or without them is plenty money effortlessly for them. Imagine you are risking $100,000. Maybe you have a big account. You risk $100,000 from 2012. You invested it in trading. Just sell it to the bank. I don't know how many loss are you going to use. Just say you just reach $100,000, maybe to risk maybe you risk about 100 pips or 200 pips on $100,000. And then guess what? This person will have spent millions, multi-millions of dollars. Look at it. So, swing trading, trust me. People at a point in time, people will be looking at you like, is this person not doing juju like this? This person not doing refill money like this? How is this person making all this money? And at the end of the day, we know they see any major working they do. What is it doing? Where is it getting his money? This is why you have to invest all you have. Focus on this knowledge. If you get this knowledge right, trust me, it can make you. Just get it. You might just struggle for your first year, your second year. From your third year, you start seeing some good results. So look at it. Irrespective of the Fibonacci retracement that I just taught you guys yesterday, and then boom to the upside. Now, do we have another major level right here? Another major level I would just say we should draw should be something here. Let's just put it here. Because the market got here and since then it has never come back there. So anytime the market will eventually come here in the future, something must happen. So now I'll put our minor level here because this is where the market gets to before it starts increasing. So I'll draw a minor level here. So I'll put our minor level here. Let me shrink it. I'm not putting it above the week because it couldn't close above the week. So that means this place is kind of a strong level. So as this market will come here now, if you get here, it might retrace, it might do consolidation. If it breaks, this is a confirmation that it wants to start heading to the upside. So now, ladies and gentlemen, let's draw a Fibonacci retracement again. This is our recent low, this is our recent high. Week to week, look at it. It will just be like a witch. Look at it. This is another one. Where did the market get to before it started heading to the upside? 0.5. And multiple conferences, it fall to your major level. Can you see? Very, very straightforward. Very simple. Big trading, very simple. Simple. That's my grandfather's name. I like it simple. Make it simple. My uncle bears, I like it simple too right now. So make it simple. Make it simple. You guys see. From weeks to weeks, look at where you retrace to. You'll have been waiting for you to come here. That anytime this market come here, just like that USD that will catch. Boom. But guess what? You will be trading every time. Look at how many months you'll have used to wait for this market. These 3 months. After you saw this retracement, you'll be like, this market is retracing. Let me just position. 1, 2, 3. These 3 months can do. Before the market got here, boom. Now it's up. Knowledge, take it serious. But my religion, Islam, he said, looking for knowledge, it is compulsory. Like compulsory. Look for knowledge because that's what is going to liberate you. Either in this life, financially, your family wise, your religion wise, everything. Look for knowledge. Find the truth. Truthful knowledge that will liberate you. So that's it. Ladies and gentlemen, I am done with analyzing USDJPY. I'll just go to weekly time frame to see if there's any adjustment I can do. Just go to weekly time frame. Is there any adjustment I need to do? I'm not saying. I can only see somewhere where I can draw like a minor level, and they are not very minor. So just like we have something like a W pattern here. So see, sometimes W pattern can be crazy. Look at it. Didn't even reach where it's supposed to reach before you start doing that movement. So I can just say, okay, when this market go here, it's big what? So you guys will agree with me that when this market got here, something push it back down. This is a weekly time frame. It's also a very strong time frame. Something push it back down, you finally break it, but you won't use it to compare major level because that one is not easy to break and it doesn't get there often. So it break it to the upside, it got here, it push it back down, it got here, it consolidate before it finally break. After breaking, it retested before it got to this level, and after it move from this major level, it come here, test it, push it down, but they no burn away when you come to this major level again. You no be mate, boom, to the upside. It break it, retested, you can see it break it, retested, now to the upside. Now ladies and gentlemen, I can confidently call a trade idea from here, even though it is on a weekly time frame. This is a buy, USDJPY buy. Like, it's a swing trade though, because the stop loss is going to be wide. Look at it from this level. This is a bullish engulfing candle, a confirmation. Move your stop loss to this level. This you can see very crazy. How many pips is this? This is 489 pips. Are you kidding me? To catch how many pips? Like 795 pips. So it's not worth it. It's not worth it. If it's not 1 to 2 risk to reward ratio, it's not worth it. So okay, 429 pips. You can see. But I'm just saying it in case anybody wants to take it. This is a good buy. This is a good buy because we have gotten a breakout, a retest, continuation. So after we got that retest, this is a bullish engulfing candle that is letting us know that this market wants to come. So this market might play out. To get here, it might take you another 1 month, but it's going to eventually get here. We are not enough. That is how market moves. Very simple. Who did not understand? Who over understand? Let me know. You're welcome, Aridoh. You're welcome, Shibuize. You're welcome, David Moses. Who did not understand that analysis? Or who over understand like your head is spinning right now? I'm waiting for your response. It's not about it's clear. Let me understand, like, how is it clear? Like, is it inspiring your head? Like, is it very simple? Is it something you can do on your own without even needing Mr. Diamond? Or it's still not clear? Because I make sure I break it down to you guys. Aridoh said, I understand. How did you understand? Are you inspired with this analysis? Did I say very clear? How is it very clear? Tomorrow we will talk about psychology. Like psychology, I'm not talking about psychological level in trading. I'm talking about psychology of the trader. We'll talk about it tomorrow by those minutes. That's it. If I infidelity say, bro, you are making this analysis look very simple. Now so you totally melted this explanation. That is it. So Aridoh said, I'm going to take the USDPY and forget it with a very small note. It's alright. Do it. I'm sure you're going to come back with testimony by those days. Kanye said, perfect. I can go back and practice it. Beautiful. Show me must say I'm inspired. You must be inspired because I simplified it. Aaron Dami said that psychology is important. So I can't wait. Yeah, we're going to do that tomorrow. By God's grace, we're going to teach psychology of the trader tomorrow. all these things. My courses, this is in the I know they sell course, but this video that I'm doing right now is more as a course. I can put it together, hide it on YouTube, and then put the link somewhere in the website, monetize it, and start selling it for people. Of course, it is valuable, very, very valuable, but I don't want to do that. I don't want to sell my course. I'm teaching for free. The people that will take it serious will take it serious. The ones that will not be serious, even if you sell it, even if they pay money, they'll still be looking for one only grade. They won't be serious. I won't sell it. But one thing I will sell, my NFP strategy, I'm not giving it out for free anymore. Thought about it. Somebody advised me. I'm not teaching it for free anymore. But people in my Signal channel and my mentorship channel, they will enjoy it. Every time we have NFP, I give it to them. But anytime I want to give that knowledge out, $5,000 to $10,000, that's the price tag. So right now I won't sell it because I want to see that strategy make me 6 figures, 7 figures first. 6 figures to 7 figures. When I make it from that strategy, I'll monetize it. The minimum I'll sell it maybe $10,000. Though you cannot afford it, it's not a must. After all, I don't want it to be so crowded in the industry. So it has to be with few people that can afford it. Okay, so ladies and gentlemen, any question? Now let me go back and then let me now scale to lower time. Let me go to daily time frame. You can see, honestly, let me tell you guys something. Taking your trade decision is not, you are not going to be taking your trade decision on weekly or monthly time frame. No, it is because I just see a very clear setup on weekly time frame that I call it out. Honestly, to take your entry, you have to scale down to 4 hours time frame. If you scale down to 4 hour time frame, you don't have to have a wide stop loss like this. No, you will have catch the trade early. Look at after the breakout happened. Boom, breakout, retest. You'll have catch the trade from here. Where is the long position? You'll have catch the trade, break, retest. This is a bullish engulfing candle on a 4 hours time frame. You put your stop loss below this minor level here, and then boom. These are many stop loss now. 159 pips. Let's say 160 pips compared to almost 500 pips that we are talking about here. So now look at it. Let me show you this. Let me show you this, and let me now extend this to the future. This way we have another minor level. So let's say this trade is coming here. This is how many risk to reward ratio. We are catching 1,000 pips, 1,042 pips, and we are risking what? 160 pips. This is it. You can see. So it's because we have not been analyzing USDJPY. It's not the pair I want to trade. Even with this analysis that I'm doing right now, I'm just going to remove it from my watch list. I'm okay with that 7 pairs alone. I don't have to have a lot of pairs. Doesn't mean I can't go analyze any pairs, make money from any pairs. So ladies and gentlemen, let's say we enter this trade from here, which happens to be June 2nd on a Friday. Since Friday, June, we enter this trade from here, and then guess what? We'll have been in profit of, we'll have made even more than what we are risking. And at this level, when it come back here, you can see this is a level here. It come back to retest that level. We'll have had another position here and then continue to the upside. Swing trading is very, very sweet. Very, very sweet. But because we look our entry on the highest time frame, that is why we got this kind of wide stop loss. But look at it, 160 pips. 160 pips to catch 1,000 pips. Isn't that crazy? 160 to catch 1,000 pips. Is that not crazy? Look at it, 1,042 pips. That is what and that is like 6.56 risk to reward ratio. So if you are risking like $100 on this trade, that means at the end of this trade, eating all our full TP, we will have made like what, 650 something dollars. From $100 to 650 something dollars. That's like how many? That's like 600% profit. 600% profit on what you are risking. So imagine if you are now risking $1,000, that's $6,000. It might take you like 1 year. That's why if you want to be a swing trader, please have a big account. That is what is going to worth the wait. Big account, like this. That's why I was encouraging $100,000 account then, but a lot of it cannot afford it. That I said anybody that want to buy profit, I can buy 10,000. But I know you guys are going to get there. You are going to work to that level. You are going to surpass. So at least look at Consummate. Consummate is offering a $400,000 account. There's nothing that says you cannot buy that $400,000 account, pass it with one NFP, and use it to be swinging trades. Just take one trade and forget it. If you are risking, let's say you are risking 5% of $400,000 account is 40,000. Is it? Is it 40,000 or 20,000? 10% of 400,000 will be 40. Yeah. So 5% will be what? Will be 20. Imagine you are risking 5% of that your account, $20,000. You're going to be making times 6 of that. So at the end of the day, maybe at the end of 1 year, maybe this trade is going to last for like 3 months, 4 months, 5 months. At the end of it, you are making times 6 of $20,000. 2 times 5, 10, 2 times 6, 12. That's like over $120,000. Very well. Simple as that. Simple as that. So that is how to do. So you come to 4 hours time frame, sometimes 1 hour time frame to look for entry. Even if you come to 1 hour time frame, you will see that we will still get a lower entry. But don't go below 1 hour, because market manipulation, you will see that the market is doing as if it's ready. It's not just ready to just serve you breakfast. Look at breakout happen here. Breakout happen here. We are waiting for a retest. Some people have even catch it from this breakout. This small retest, they will enter. But this is what I'm saying is happening on NAS. NAS is coming to do something like this. So after now, it came back to retest. We'll have entered around here. This is a what? A bullish engulfing candle. This breakout, you retested, breakout. On this candle, you have entered. On this candle, this is a bullish engulfing candle and a confirmation to enter. You enter from this level. See, it will still go in a drawdown before it finally go up. And after that go up, it's still coming. So, but anyway, 4 hours and 1 hour is the best time frame to look for your entry as a swing trader. And swing trading is very, very sweet. You don't have to be trading all the time. You don't have to be trading all the time. Take one trade, it will pay off. For some people that today they will take trade, they will make money. Tomorrow they will lose some of the money. Tomorrow tomorrow they will take another trade. They will, compared to somebody that have been in a trade and continue making that trade, like it's just compounding the profit for them. So that is how it works. So I can delete this right now. This one make more sense. Even if I say 1 hour time frame, our stop loss will now be a little bit wide if you enter from here, like I've said. Enter from here. Also, our stop loss this time around, our stop loss is just 127 pips, making our risk to reward ratio instead of 6 now 8. You see, that's trading. So tomorrow we talk about psychology. Any question? I think we have finished so far. Yeah, thank you, Gary. Honor the Kelly. Say 20,000. Yes, 20,000 5% of 400,000. So any question, let my face show. Any question, ladies and gentlemen, you guys gained from what we taught today? Major level, minor level, we did a top-down analysis, we used Fibonacci retracements, we didn't use trend line at all. So you know it's not all the time. All the analysis I did, not because I'm teaching, within 10 minutes or 15 minutes, I'm done. We didn't use trend line at all. We didn't use what again? Psychology. Let's see. Let me look at the chart. We might see some psychology level. Let me share my screen. You might see some psychology level that the price will actually respect. Guys, look at it. This 138,500. Look at where this market gets to 138,477, 138,477. Look at it. Let me just do something. Let me do as if I want to. Let me delete this. I will do it back. Okay. So now 138,500. I've seen a major level. I've seen a psychological level. 138,500. That's a psychology level. Look at it. Look at the way market come there. So look at the way market come there. Look at it. It came there, pew to the upside. It never come. It never come back there again. So it started going on. It never come. So, but what is going to now make you to be confident about that thing is that when you add another confluence, because there's a lot of psychology level in the price. But how do you know the one that you are going to use as a base decision? That is when you will now use that is when you now okay. I have a minor level, a minor strong level. Remember, you draw your minor level from monthly time frame and weekly time frame. So even that minor level is a strong level for day traders. Because in fact, is it not the work we are using to base our trade decision right now? So now, you know your minor level here is here, and you have a psychology level close to that minor level. So you just base your decision on, in fact, the way you see it, you see the market come here, boom. What happened? He did what? He went back up. The next candle, boom. You just wait. You'll have entered from here anyway. You'll have entered because you'll be waiting for a confirmation candle, and that's the bullish engulfing candle. Guys, if you have not reached candlestick Bible, go and read it. Go and read candlestick Bible if you have not read it. And if you don't have it, I can send it to you. I'll come to my day. Go and read it. Candlestick Bible is the one that will let you know the right candle to let you know if you should enter trade or not. And that's why you will see me talk about the bullish engulfing candle. Sometimes you see a tweezer top, sometimes you see tweezer bottom, sometimes you see doji candle. You can see all these, you can see this hammer pin bar, doji candle, and things like that. So it is from there that you will know which candlestick. You can use candlestick for extra confirmation when you want to enter trade, okay? And when you want to even exit trade sometimes, you can use candlestick as a confirmation. Look at it, ladies and gentlemen. Top down analysis done, major level drawn, minor level drawn. We're good. We're good. Psychological level respected. We're good. So any question? Any question? If you smash the like button, make sure you smash the like button right now. Any question? Any question? So we can call it a day. You have question? So I'm going to give you guys an assignment right now. I want you guys to go and analyze, aside from any pair that I've analyzed totally. Do analyze USDPY. Do analyze all my 7 pairs that I have on my watch list. Go and analyze. You know how many pairs we have? NZD USD is there. In fact, even though I think I've analyzed USD before, you can pick on trade that I've not analyzed before. Analyze it and send it to me on my DM. Let me look at your analysis. Global Abiodun show me more. So if you are taking our trade with 1 hour of our time, how are we to know when it will be trade so that we can take our profit before the retracement? When you are swinging trade, you know that from one major level to another major level, from one minor level to another minor level. So when the retracement is happening, you are not meant to close your trade. You are meant to just be patient. Understand that a retracement is happening. So when your retracement is happening, you can draw your Fibonacci retracement to know where that retracement. Now DPP JPY that we are in right now, let me quickly use that as a, let me cite that as an example. Let me show my screen. Let me show my screen. DBP JPY. Look at DBP JPY. Let me go to 4 hours time frame. Look at it. This market, we started entering this market from here. It moved up here. You can see when it gets here, it retraces a little bit back down, but we didn't get out of the trade. Rather, I give an opportunity for others to enter. So finally, it moved up. It retraced a little bit here. It moved to the upside. Now it's retracing again. You will not see me. Did I say you should exit GBP JPY swing? No. What I'm saying is that since I see it's retracing, what did I now do? I have to draw from recent high, from recent low to recent high. This is Fibonacci. And I know that this market is likely to come to this level. When you come to this level, I'll add more position. The one that I'm in before, I'm already in profit. I'll now add more position, put my stop loss below, just like I've taught it yesterday, below the 0.618, and then let it continue to fly up, because it's not possible for market to just move one up like this. See where we are going. See where we are going. See where we are going. This is our target. This is our major level here. So you can't expect market to just move one like this to the up. It will go, it will retrace, it will go, it will retrace. In that retracement is multiple opportunities to re-enter, to add more positions, you know, and things like that. Before we can say we want to exit trade, that is when we'll have seen a clear chart pattern that want to reverse the trade. So when this market is not respecting here right now, you might start deciding maybe we should just close in profit and see if they want to come and do one thing, but I believe it's going to fulfill the course. And if it doesn't fulfill it, it's market. But right now, I'm still very, very cool because I believe it's coming here to retain. Look at it when this market has taken off. Breakout retest. Can you see? Can you see it? It has breakout, it has retested. Since it has breakout retested, it has been moving. Though we didn't catch it earlier. After I did the analysis, this market was somewhere around here. Somewhere that I was looking for an entry. Finally, I got an entry. It took us out at some point because it has not. It shouldn't have taken us out in those days that it took us out, and that's because we want to cash the trade that has begun to run. If to say it is at this major level that we cash it, we will cash it early, and that's why you will see that NAS 100 is going to be a very, very good trade that goes with an AUD USD because you cash them early. Do you understand? This is NAS 100. Look at where I caught it. We caught it early. It has been playing all the way from one major level to another. Look at this one's a minor level here. It has been playing up from here. From here, after it break out, it has been coming up. We didn't catch it earlier. So, but when it gets to this major level, he was able to break this major level. I know that if he break this major level, the next point is here. So, we catch it early. So all this retracement right now, we know it might still come and retest this trend line and then boom to the upside. Same thing as AUD USD. Look at AUD USD. Can you see? We catch it at the major level. Once you catch it at major level, you don't get issue. Really, if you come back to that major level now, come back and retest. Unless if that trade is invalid. If anything that says you should break that major level, that trade has totally become invalidated. So because the major level, if you draw it properly the way I've taught it today, it is always going to be respected. Look at it. I mean, look at it. My major level fall around a psychological level, and it was a major level together with weekly Fibonacci retracement level that I draw. Let me delete this. I don't like my highlight in the chart clean. Look at it. From swing high to swing low, the 618 was here. So, and that is why we've been in profit since when we entered this trade. Okay, so any question? Do you understand now? Okay, I'm seeing some comments. Global show women say also, is it good to trade against the trend by taking retracement trade? Yes, you can. You can take retracement. Though me, I don't have enough equity to start playing pranks on my accounts like that. But when I have enough money, I'll be doing it too, but with a low risk. Because I knew when that GBP was retracing, I knew it's going to retrace, and I knew it's going to retrace to a certain level, least. So now, is it not fulfilling that retracement? It's fulfilling it. There's no, like Kojo, I learned this from Kojo. When Kojo is swinging a trade, if he discover that that trade wants to retrace, he's going to now, let's say he's buying that trade. He got to a level like that GBP and now want to start retracing. He will sell it from that place, and at the point he expects it to get to for the retracement to end, he will take his profit there, add another position, continue to the upside. If you see those guys making crazy money, you can see him flaunting all this, flaunting his Dubai and all of those things. They've mastered this game. They pay their price. Don't envy anybody that is successful. Instead, respect, pray for them. Your own too will come. So I think I've answered your question. Andy Wale says, in trying to pass your profile account, it's a leverage matter. You just finally bought. I don't know anybody I'm waiting for the person. Why you just? I'm not. This is a question that you are not supposed to be asking me here, Mr. Andy, because you are in the Signal channel. It shows that this question you are asking me right here, I have answered it in the Signal channel. I didn't expect you to be answering. That shows that you are not following the instructions 100% that is being given in the Signal and the Mentorship channel. In the Signal channel, I told you there's no more. This is the kind of lot size you are going to use. Trash it. I've told you how to calculate your lot sizes to know the kind of how much are you risking and the money you want to risk. And if you are trading your prop firm, risk within 0.5 to 1% on a trade. Except if you want to trade NFP that you want to just risk 5% to pass your account at once. But when you are doing normal trading like this, risk only 1% or 0.5. Now see, he said, I remember, so sorry. So go back to the Signal channel. All the informations and the Mentorship channel, all these informations are there. Okay, so I'm not expected to be saying all what we are teaching in the Mentorship channel and the Signal channel here, because this I'm not ready to hide this video. It's going to be in public. So what I'm teaching in that Signal and Mentorship channel should be peculiar to the people that are there, not people that did not follow the instruction by finding themselves there, and now be having all the information that we are teaching in the Mentorship and the Signal channel. No, even this one, if not because I don't want to be holding and things like that, I'll make it exclusive to the people in the Mentorship and the Signal channel. But come on, let everybody learn. Even if you learn, that will give you an insight that, come on, I need to get close to this guy, I need to enter his mentorship, I need to be with him, I need to learn more from him. That's to let you know the value we are giving out. Okay, so that is that about that. Any other question? Any other question? If there's no any question, if you are good with today's lessons and today's analysis station and everything, just say thank you and then put bye bye in the chat box. Let's call it today. Put some bye byes in the chat box. Let me know that you are satisfied. I see some bye bye right now. You're good. Talking to you. Okay. Okay, so right now that good. Bye bye. Aaron, Gabriel, Marcus, you are just joining us. So don't come on robot with thank you for the update. You're just joining us. I hope you take your time to watch the video again. Thank you, Fidelity Token. Kanye, are you there? Kanye, are you there? Honor the Kiri. Okay. Hello, there is laptop. SG, you are just coming. When we have finished class, better rewatch it again. It's very, very valuable. I don't even need to tell you. I don't need to make advertisement. Okay. Yeah, so thank you, Dari Fidelity. You said push the like button if you have not. Push it, press it, smash it. It is free. They will not deduct money from your account if you do it. Okay. Juliet, thank you. Bye bye, you guys. So see you tomorrow. Tomorrow, what are we talking about? We are teaching psychology of a forex trader. Psychology is what we are teaching tomorrow. By the grace of God. Bye for now, guys.